Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. We are in the middle of a very apocalyptic type situation with the markets running rampant. Anything is possible during these times of uncertainty, during these times of economic turmoil. Things could go south like the snap or with the snap of a finger, and things have. We saw silver shoot all the way down to $11.72, but then it did recover. Now, when there's so much volatility in these markets, you need to really invest wisely because you can definitely make some bad decisions. Before we jump into this article from Seeking Alpha, I just want to talk about how to invest properly. Now, there's no right or wrong way to invest, but there are smarter and sillier and riskier ways to invest, right? If you're buying low and selling high, you're doing something right. It's an art though. You need to understand where the tops are, where the bottoms are, right? And that comes with getting information from the charts, what's happening in the economy. A lot of times people use their emotions to invest without looking at the information that's given. I make these videos on a day-to-day basis because I'm sharing what's happening in the economy with you guys and sharing the charts, seeing what the patterns are, what the prices look like they're going to be doing, because that's going to help you in return strategize and see what your game plan is going to be so you can become the most successful, right? A lot of times people invest with their emotions, and that can definitely be risky because that's where biased opinions come in. That's where unrealistic, irrational decision making comes in. So try to look at the markets realistically, rationally, and you will be much better off. If you can see what's happening in the economy and put that together with the charts, you're definitely going to be more accurate than just hoping the markets go one way or another. So anyways, the link to this article from Seeking Alpha will be in the description. Make sure to smash the like button. Let's see if this video can get 250 likes. Everyone go like the video right now. If you love precious metals, smash the like button. So anyways, silver has made strides on the upside. The correction made silver stronger, a cleansing. Silver mining stocks can provide leveraged returns on the upside. The SIL and the SILJ to turbocharge a long position in the volatile metal. So, it took incredible guts and fortitude to remain long the silver market from late February through mid-March. The price of the volatile precious metal that moves higher and lower on sentiment plunged. July silver futures hit a high of $19.07 on February 24th and then reached a bottom of $11.68 per ounce on March 18th. So you can see how things can swing from one way to another. It's because we're living in crazy times right now, catastrophic times right now. On February 14th, it reached a bottom of $11.68 per ounce. You know how many people probably panic sold right then, thinking it was going to go lower, selling themselves short? They probably bought in around $16, $17 and sold it at $11. It's supposed to be buy low, sell high. Most people end up buying high and selling low in fear that it's going to go lower. So anyways, the 3-week move took silver 38% lower. Silver did not only plunge, but also fell to its lowest price in 11 years since the second quarter in 2009. Buying silver below $12 was no easy feat. While July futures contract remained at the level for only 3 sessions on March 16th, 18th, and 19th, physical dealers pushed premiums for silver bars and coins higher as the price fell to more than a decade low. And that's true. Even though silver was selling, the spot price was $11, you weren't going to be able to buy any silver for $11. You were still paying $20. There was $10 premiums even on American Eagles. So, it's not like it was a discount. The premiums were still there, which affected a lot of people, and people speculate that's from the shortage. So since then, the price of silver recovered along with the shares of silver mining companies. The global X-Mine Silver Miner ETF, SIL, holds shares of the world's leading primary silver producing companies. So, an interview on Kitco last week. In an interview with Kitco, I said that I favor gold as long-term investment, but when it comes to trading, silver is my starting choice. And that's because silver is more volatile. It hits higher highs and lower lows. There's a lot more opportunity trading silver than gold because silver moves to much more extreme levels than gold does. So from a short-term perspective, Silver tends to deliver far more price volatility on a percentage basis, and that's what I just talked about. If gold's going to rise 10%, silver's going to be rising 15%. If gold's going to drop 10%, silver can drop 15%. So it's just a more exaggerated price of gold. It's like gold on steroids. During the height of risk-off behavior in markets across all asset classes, the price of gold dropped from $1,704 in early March to a low of $1,450 in mid-March on the continuous futures contract, or 14.9%. Silver plunged from $18.92 in late February to $11.74, or 37.9%, over twice the percentage level during the period of carnage in markets. As the old song by Blood, Sweat, and Tears goes, what goes up must come down, spinning wheel got to go round. Silver and gold turned out to be those spinning wheels in the middle of March, then both recovered. Silver just recovered at a higher percentage. Silver's penchant for extreme volatility at times made the move to the upside far greater on a percentage basis. Trading the sardines ain't for eating, they are for trading, as the old joke goes. Silver is one of my favorite sardines when it comes to taking price risk in markets. When silver decides to move, there is nothing quite like precious metal. Silver has made strides on the upside. After hitting a low of $1,450 in mid-March, gold has climbed to an 11-year, even higher level, $1,775. It was trading around the $1,730 level at the end of last week. The price appreciated by over 19% from risk-off lows. That chart shows silver's recovery took it from $11.74 to the $18.04 level or last week, or 53% higher. So silver rose 53% when gold only rose 19%. So you can see silver definitely is outperforming gold and would have made you a lot more money. Silver delivered over double the percentage loss and gain compared to gold over the past couple months. And that's just showing silver's potential, right? Silver definitely can perform a lot better than the yellow metal. The correction made silver stronger, a cleansing. Open interest is the total number of long and short positions in a futures market. The metric can provide valuable clues about the behavior of the market participants during significant price moves. In late February, when silver was at its high on the July contract at over $19 per ounce, open interest in the COMEX silver futures market rose to a high of 244,000 contracts. The level was a record high. As of the end of last week, the metric stood at 155,000 contracts, 89,000 contracts lower, or a decline of 36.5% from the high of after reaching a low of below 132 contracts in early May. The global pandemic caused many speculators to liquidate risk positions and head for the sidelines in the market. The price of July silver futures was trading at $17.60 per ounce on May 22nd, a little over $1.30 off the high of the year, but almost $5.90 off the low. The price action in silver cleaned out the market. If silver is going to resume its upward price path, there will be fewer sellers to take profits as the price appreciates. Moreover, those who bailed out of the market are likely to come back in as the price moves higher, as they will not want to miss a significant long overdue rally in silver. And that's true. That just shows, the weaker hands will come back in as everyone wants a piece of the pie, right? Everyone's going to be wanting silver at some point. If you did sell and you're looking to come back in, hopefully you do it before it really does appreciate, or you're going to be selling yourself short, or, definitely having to pay the premium or pay the price. So the correction in March may have been ugly, but it cleaned out the market of weak longs and made a case for higher highs stronger, which is definitely good. So silver mining stocks can provide leverage returns on the upside. Silver is more volatile than gold. Shares of silver mining companies often experience more price variance than the metal. The price of July futures dropped by 38% from late February through mid-March, and then rallied by 50% from March low through May 22nd with a price of $17.60. So, it definitely shows silver's potential. I'm not going to go into this because a lot of you guys are in this for the physical silver. A lot of people aren't. If you do want to continue on reading about, the SIL and the SILJ and the ETF side of things, the digital, the paper side of things, the link will be in the description. But I'm just going to wrap this up by saying, there's a lot of potential right now, and a lot of times people are going to try to downplay where silver could be headed. A lot of times you have to pick and choose what information you take to hear. I try to share what's happening in the economy, share my opinion, separate those two though, because there's definitely a difference between fact and opinion. I can say that I think silver is going to be mid $20 within the next 3 to 6 months, but that's just an assumption based on the information given to me, right? There's definitely a lot of potential, and not saying that, silver couldn't possibly go lower, but it's definitely looking like it's going to be going higher. Just looking from the 2008 credit crisis, which led to $50 silver in 2011, how similar the markets are from now to those days, from back in those days, and also how much more extreme and severe things are now, which could lead to even higher prices in the next 3 to 5 years. So I'm definitely bullish on silver for the short, medium, and long term. A lot of people are saying the short term doesn't look as bullish as the medium and the long term, but I definitely see a lot of potential even nowadays, right? So depending on where you're headed, what your goals are, is going to depend when you exit out. And I hope you don't sell yourself short. I hope you allow silver's potential to naturally rise. So anyways, I'm going to wrap this video up here. If you thought this video was educational, informational, or at least just entertaining, make sure to smash the like button. Let's see if this video can get 250 likes. Everyone go like the video right now. If you love precious metals, smash the like button. Subscribe if you're new. I post daily videos. Stay tuned for more. This was Silver Slayer. I'll see you guys soon. Peace.